Hello, folks. It's Jeff Camarda again. Long time since a video, but I wanted to kind of brief you on a couple of things that I think are really important and timely. And the first is, gee whiz, please get out and vote. Get out and vote. Vote for your best interest and for your family. As you know, it's our policy to be pretty apolitical, right? Everybody's got their own beliefs and they're entitled, and you know, there's good and bad out there everywhere, I guess. So I'm not really going to get into those issues, but I do want to point out a couple of things that may inform your vote, and if they matter to you, then please go out and vote your best interest, if that's important to you. All right, so as you probably know from hopefully reading the book that all clients got a copy of, we really, as the century progresses, we're a quarter over, right? Quarter into the 21st century, you know, there's some pretty bleak trends. And the essence of that is that, you know, the U.S. deficits are already out of control, probably going to get worse. With interest rates going up, it's going to just add fuel to the fire. And the odds of significant tax increases on folks like you, the people that watch these videos, the very small percentage of Americans that have significant wealth, taxes are almost certainly going to go up. And if that matters to you, you may want to think about the candidates and what their positions on taxes are. Remember, IRS just got $80 billion of funding basically to increase audits and enforcements and to come after, you know, they say not the middle class, but really upper middle class is, you know, that's where the money is, and they haven't, you know, that's a very clear target. So if that matters to you, please consider that and get out and vote. It really matters. It really matters. I'm not going to suggest who you should vote for. My job is to point out the financial issues, and the big one really for our clients and friends is tax increases and the ability of the IRS, you know, to kind of turn you upside down and shake the loose change out of your pockets. The second thing that I wanted to mention is, you know, we're very happy with the tactical portfolio management led by my smarter brother, Jonathan Camarda, and wife and partner Kimberly Camarda, two excellent market technicians. They really are quite good, and we're very comfortable that you know with our ability to utilize that to not only make money but to protect client wealth. But you know, the indicators that we look at, and I'm going to see if I had them up here before I was just in class. Just wrapped up a class at There we are, Georgetown Law. Is so right now, you know, we look at a number of indicators, and the first is the short-term indicator, and we're enjoying a bit of a rally, a bear market rally, I think, over the past several weeks. And some people, you know, some human, you know, the psychology being what it is, gee whiz, okay, the bear ran away, the flowers are blooming, it's good times again. But, you know, these things tend to be, you know, cyclical, and I don't think we're out of the soup yet. So the short-term indicator for U.S. equities is positive. It's bullish, and it's been, you know, bullish since October 3rd. We've had a nice bounce. Whether or not that persists, I don't, you know, how long it persists, I should say, is really just is yet to be seen. It may go through the end of the year into next year. But the short-term indicator is bullish, but the long-term indicators for U.S. equities and for real estate and for bonds and fixed income and even for gold are bearish. They're negative. So we think we're still in a long-term pretty vicious bear market, and we're managing the portfolios that way, where both stocks and bonds will fall as interest rates go up. So you see these, you know, these what I call relief, well, not just me, the relief rallies where, you know, and a bear market, you know, and a bull market in the inverse, you know, will tend to go, it goes down, then it goes up a little bit, but not quite as high, and it goes down more, then it goes up a little bit, and it goes down more. We're going to try to stay on camera here. But the point is, we see lower lows and lower highs. There's still highs along the way, but they're kind of head fakes. So anyway, that's, you know, how we're managing the portfolios, and we will look, you know, when it seems opportune take advantage of these relief rallies and make some money and trade it that way. At least with the current forecast that we're looking at, that we think these are just bounces, dead cat bounces, if you will, in a long-term bearish trend. So I just wanted to pass it on to you. Sometimes Jonathan is so intellectual that, sometimes the point is not quite as clear as it could be. So my job is to be the great clarifier. Hopefully that was clear. And then the last thing is, a lot of you folks, and actually I was just motivated. I'm fortunate that one of my professors at Georgetown, just really an icon in the estate planning world, his name is Ed Beckwith, and was talking about charitable inclination, and which is something that we at Camarda don't spend enough time talking to clients about. And why? I guess, because it's kind of tangential to investments, and mostly because when you give away money to charity, you need to be motivated by charitable intent. There's a lot of whiz-bang tax stuff going on, which is not nearly as beneficial as maybe some planners would have you believe. At the end of the day, you give, you got this much money, you give some to charity, you get some tax savings, but the family still winds up with this, where they could have had this after taxes. It's a net transfer of family wealth to the charity, even at the tax effects. Never forget that. But that said, a lot of folks care a lot about giving to churches or educational institutions or whatever. So that's something that we have a very, very high degree of expertise at through our tax, through our personal wealth advisor team and through the tax master, CPAs, and attorneys and so forth, myself. So if you have an interest in that, we're not going to push it on you. But please ask your PWA, or reach out to me or whatever, and I'll be happy to talk about what your interests are and see if it makes sense to develop a charitable giving plan. And that's pretty much it. Hopefully I haven't blathered on too long. Good chatting to all of you. Until next time, and may it not be, I just got to find my mouse down here near the monitor. May it not be so long. Thank you so much for watching. Bye-bye.